So what is it with that shitcoin gold rush? Well, stay tuned to find out. So you've got that coin sitting in your portfolio. Yep, that one you bought during its ICO. Now, you're not the kind of person who carelessly invests their money in whatever ICO pops up. And this project, well, it really seemed to have some perspectives of really high profits. You know, it ticked all the boxes, you know, it had great investors backing the project, the programmers were experienced, the white paper had a detailed roadmap. What the hell happened? Why is it still sitting there way below its ICO price, making you wonder whether it wasn't just another shit coin after all? And it looks like it ain't just us who have made these similar mistakes. So has Chief Strategy Officer at CoinShares, Meltem de Meyers. And after more experience than most will ever get in crypto, she's got some really useful strategic and economic tips for both traders and entrepreneurs alike. Meltem de Meyers reckons this shitcoin thunderstorm all boils down to a conflict of interest. Traders want to invest in projects and see crazy returns, preferably this week, while the founders and CEOs of crypto projects want to raise capital for their startups, or in other words, for their teams and themselves. And most of them also want to put in as little effort as possible and see big investment money. So this is the conflict of interest, traders versus founders. So what happened? Have investors gotten naive? Have ICO CEOs changed their funding strategies so more inexperienced newbies buy into shitcoins with no projects actually standing behind them? The answers are no and no. It's all really about a few key factors. So first of all, old-time investors saw everything go up and to the right, and everyone left outside the market, or the latecomers, also wanted a piece of the cake, and now they're experiencing some serious FOMO, fear of missing out. They also want to cash out. So the mentality adopted by most is blockchain, make me money. I mean, surely the next greatest ICO with a 100,000 times return rate is lying just right around the corner, just waiting for you to discover it. So everyone is looking for the next Bitcoin, Ripple, Ethereum. And that's the thing, when you really want to find something, your brain gets bored of you and starts making shit up. It starts convincing you that maybe, just maybe, investing in that ICO with a useless token is a great idea after all. So people think the market will be going up and to the right forever, and investors keep playing the ICO shitcoin roulette. Basically, you've got loads of projects playing on FOMO and raising massive capital for their non-existent projects. And a group of unfed investors who are more than easily manipulatable, irrelevant of having loads of experience, irrelevant of being able to carry out amazing technical analysis. No one wants to miss the next big thing and be left drinking that lonely beer in downtown New York while everyone else is at it in Monaco on a champagne-drenched yacht. And then you've got those ICO CEOs who are also dreaming of that same champagne-drenched yacht, preferably with a red Lambo parked on that same yacht's roof. And what we see is many projects not delivering. Coming up with a project that can actually add value is a lot of hard work and needs amazing strategy skills. Most ICO businesses simply don't live up to their roadmaps and white papers. So once again, we're looking at the problem of greed. You know, that's why we're getting all these fake ICOs. And the worst thing is that they're raising as much money as they have ever been. Raising money is still as easy as it's ever been, while building value-generating projects is still as hard as it's ever been. So what we're witnessing time and again is more shitcoins entering the market and consuming all value. Why does this keep happening? Well, it all really boils down to the fact that not all projects need a token, but it's easier to raise funds that way. Even though the idea and the project itself might be useful, the token isn't. So some companies will only use the tokens while the ICO lasts and fail to find a proper use or application for it later on. So their prices will plunge inevitably. Now, some general problems with shitcoins are that people don't answer the following questions. Utility: does a token actually need to exist, or is it simply adding friction? Is it simply being used as an investment, kind of as a fund gathering tool? Value creation, will it actually really benefit society or individuals? Technical innovation, is it introducing a feature that has not been seen before? What about effort invested? Now this is really important, mind you. Does it have its own network? Was the blockchain expensive to build? Are network standards being used, like ERC20 tokens? Like, how long has the team been working on the problem? Has material effort been expended? What about stakeholder incentives? How are various stakeholders identified? What role do they play? How did they participate in value creation? And of course, we can't forget about community engagement. Does the project have a well-developed community that really discusses protocol development, how the network is going, whether they're sticking to their roadmap? Now, these criteria sound dead obvious, but that's the problem. People are forgetting to really dissect an ICO properly, and this is leading to the production of valueless tokens that are basically sabotaging the crypto market and devaluating everything. And nobody's spared of the fear of missing out, not even big players, institutions, or venture capitals, because if they do manage to buy during the ICO of a successful project, they hit the jackpot. The numbers suggest that ICOs still bring the highest returns in the shortest amounts of time. It makes sense for big players to give it a go, and when they do, their move is blared everywhere in the news, creating a hype that urges smaller investors to join as well. And this is how we get the shitcoin waterfall. As an investor, you can only control your entry price, so you enter at the lowest price and try to sell off as fast as possible, but clever investors dump them right when the hype reaches its highest. Need I say more? As soon as a coin is listed on exchanges, late investors who didn't manage to buy the ICO will instantly FOMO, but early investors, those who managed to buy it at its very beginnings, will know what to do. They will sell it. The rest of the market will be left with a gap in their wallet, a shitcoin in their portfolio, and an unshakable conviction that their investment surely is just waiting to moon like nobody has seen before. You know, it's like the next Microsoft or Yahoo or something. So at the end of the day, it is really up to you whether you buy an ICO or not. And yes, you can make some unprecedented, amazing profits, but just remember that the risks are huge as well. And Myra's final thoughts are that it's just too early to be able to make reliable predictions about the market. It's just too raw, too young, too unregulated, and she has decided that instead of focusing her energy on tokens, she's going to move it towards improving the ecosystem as a whole, making it more trustworthy and more transparent. And of course, the hope in shitcoins is not lost. There are things that can be done to assign tokens a valuable, realistic application, and that's exactly what she plans to do. Thanks so much for listening. Let me know what you think about the reasons for why there's such a proliferation of shitcoins, and I'll hear you next time.